All eyes are on the jobs report. That's, of course, due out tomorrow morning, 8:30 a.m. Eastern. And after yesterday's less than favorable ADP report, economists have been revising their forecasts, and that includes our next guest. She also revised her forecast for the second quarter growth after the Japanese earthquake over 2 months ago, and she hasn't changed it since. Let's bring in Julia Coronado. She's chief economist over at BNP Paribas. Julia, good to have you here with us. So you revised your forecast down for the jobs report tomorrow. How deep a cut? It looks like you made a pretty deep cut here.
Yeah, so we're looking now for 75,000 on non-farm payrolls. That's featuring 100,000 private sector jobs and then a loss of 25,000 public sector jobs. So go ahead.
No, you know what I'm thinking? Everybody's been bringing down those numbers, and they brought them down drastically like yourself. Any chance? I mean, those ADP numbers aren't reliable. Any chance that you guys are overshooting on the downside here?
There's, of course, always a chance with non-farm payrolls. I would say that what has been consistent in the last month or two is that all labor market indicators have been pointing to weakness. So jobless claims have been rising. The ISM survey employment indexes have been softening, and ADP has been moderating. The only laggard here is non-farm payroll. So at this point, it looks like we're due for some catch-up in the non-farm payroll numbers.
Julia, how much does this look like a soft spot to you, a soft patch as they call it? I mean, or are we looking at lesser numbers for the medium term here?
Well, so again, we had anticipated a pretty weak reading on Q2 GDP because of the Japanese earthquake and the supply chain disruptions, which we anticipated would be fairly significant. They have hit auto sales as we expected. They are probably going to imply an inventory drawdown in the second quarter, which will weigh on GDP growth. So again, we're looking for 1.5% after a 1.8% reading. That's a pretty weak first half of the year. Now, if two of the main factors driving that weakness, which are rising headline inflation, which is sapping consumer purchasing power, and supply chain disruptions, well, both of those factors should be more favorable in the second half of the year. So I do think that the second half is likely to be stronger than the first half. That said, I do think that what we're starting to come to grips with is that the U.S. is a slower growing economy than it was in the past, and we're just not capable of generating 3.5% to 4% growth on an annual basis. Probably our run rate is more like 2.5%.
So a slower growing economy, Julia. 20 seconds left here, but do you see us going back into recession, as some have suggested to Matt and me over this past week?
You know, there's always, I think you can't deny that the chances of a recession have risen in the last couple of weeks, given what we've seen. But again, I think that we know what's driving the weakness, and given that oil prices have come off their highs and look to be, you know, stuck in a lower range, and that Japan is starting to ramp up production, we should have some nice tailwinds going into the second half. So I think it's certainly possible,
right?
But it doesn't seem, barring some other shock to the economy or to financial markets, that that's the most likely scenario.
We'll keep our fingers crossed for those tailwinds. Julia, thank you so much. Julia Coronado, chief economist over at BNP Paribas.